want to bring in Sam Vadas, a Schwab Network contributor, right away to help set up the action today. All right, Sam, we've been watching some churn this morning. Trade is still, kind of a topic that we're digging into because it seems like things are possibly moving forward between the U.S. and China, but what's your read-through on this one?
Right, so wrapping up, obviously, those 2 days of talks in Stockholm, and the takeaway, as you mentioned, was candid and constructive, which I've been covering China for many, many years and seems to be sort of code for there was no drama. Things didn't go off the rails, and so that is very much a good thing. As far as the trade truce, that continues, that will hold until August the 12th. Of course, China has an extended deadline. We've just heard from Trump this morning suggesting over in media reports that the August 1st deadline for other trading partners will not be extended. But what everybody's waiting to hear about now is whether that extension on China will be offered, because there seemed to be a bit of confusion off the back of the wrapping up of those talks over in Stockholm, that the Chinese had seemingly signaled that the 90-day extension of the tariff pause would be in place before Besant then came out and said that they may have jumped the gun somewhat. So we're going to be waiting to hear from Trump because, of course, while the Chinese may have been suggesting that they walked away with the feeling that they may have got an extension here, the US at the end of the day is the country that is tariffing China. So we do need to hear from Trump, who I believe is going to be briefed today on the matter and going to be giving an update on that. But as far as the Chinese trade relationship is concerned, Diane, obviously there are so many moving parts to this story. It's been very interesting as far as when you look at some of the trade deals that have already been struck with trading partners like the EU and Japan, where they have actually committed to huge amounts of FDI. That doesn't seem to be the case with China. Some of the sticking point seems to be around the structural challenges with China as well with regards to its economy. This is something that I covered under Trump 1.0, where no doubt the aim here is to try to boost that consumption model over in China, which would then try to balance out that trade difference with the US with regards to that surplus, obviously. But we know that obviously China has been working on that. It's been trying to come out with stimulus to try to boost that side of the equation. It has a name. It's called dual circulation. And obviously we know that the Chinese have been trying to obviously boost consumption to try to reduce its reliance very much on some of those exports. But if you look at the Chinese GDP numbers, obviously we're going to be getting GDP out today, the US as well. When you're talking about the two biggest economies in the world, I mean, the exports have really been the bright spot for China. I mean, the sort of last leg it has left to stand on as far as its growth driver is concerned. So I know that that has been a big focal point as well. But yes, we are waiting to hear final word from Trump on whether that trade truce will be extended.
And then obviously the intention today turns to the Fed, right? President Trump was sounding off on Powell once again, putting the pressure on, and the question comes up about rates, and of course he wants rate cuts. What are you paying attention to on this front and hearing about expectations?
It's all about the tone and the language, isn't it? I mean, the fact that the expectation is that the Fed is going to sit on their hands today, it seems like they have very much primed the market for that expectation as far as the market is feeling about when we could potentially see rate cuts. Obviously, the bets are for September as far as what they're pricing in right now. So it's going to be very interesting, Diane, to see how they set us up for that as far as some of the language, particularly given the political pressure that we've seen on the Federal Reserve. I mean, not to mention that very awkward interaction between Trump and Powell last week with regards to some of the renovations. We know the choice words that Trump has chosen to describe the Fed chair as well, and some of the pressure here. The dissent is going to be very interesting as far as, all eyes on Bowman and Waller at the moment, given that this is going to be the first time that we've seen multiple governors, I think since 1993, descending. But it's interesting from that perspective. I was listening to Rebecca Patterson, obviously ex-Bridgewater, who was talking about this morning, that this might just be their opinion on where they think that rates should be. But because
meaning Waller and Bowman.
Yeah, and because there has been just such a political spotlight being thrown on the Fed Reserve, obviously, then this does have a very sort of political tone to it, an angle to it right now.
And that's obviously that's one of the kind of concerns around this, and the pressure is on Powell to avoid those optics, essentially, right? The politicization of the Fed, right? But to your view, in terms of their signaling, what we expect when we look at the CME Fed Watch tool, almost 100% chance, 98%. Essentially, the expectation is for a hold between that 4.25% to 4.5%. And even though the odds are increasing for September, it's not an across-the-board expectation because the odds are just above 60%. And we've seen that before, so it's possible the can could be kicked down the road to December.
That's right. Yeah, and it all comes down to trade because the Fed chair has very much signaled that he wants to see the tariff impact. And if you've got tariff rates only being settled this August the 1st, we do need to see the material impact of that as far as the rhetoric versus the reality of what those duties are going to mean. We've already heard from the earnings as far as some of the companies, how they're feeling about the tariff impact. I was talking about Whirlpool yesterday. I was talking about UPS yesterday. We've talked about other companies like GM, for instance. And so we are starting to hear certainly noise as far as the tariff impact and effect is concerned. But I think I was listening to, Lockhart on a podcast just yesterday, who was sort of suggesting that, they could be sitting on their hands for a while if they're waiting for a material impact from tariffs, particularly if you've got the can being kicked down the road on China. You and I have been discussing all week about that potentially not showing up sort of materially until sort of just before the holiday season. So yes, they're going to be data dependent. Obviously, we've got to get through Jackson Hole before we get to the September meeting as well. So we're going to be waiting for more signaling. In the meantime, they're going to be getting more data. And, with regards to the dual mandate, a lot of the question has been about what's going to give, because we saw a bit of a softening in the jolts. Obviously, the FOMC is sandwiched in between huge data points as far as jobs is concerned. So let's see. They said that they're data dependent.
That's right, data dependent. And you mentioned trade. President Trump posting on Truth Social, quote, "The August 1st deadline is the August 1st deadline." Posting this today. It stands strong and will not be extended. A big day for America. So standing firm on that trade front. All right. Thank you, Sam. That's Sam Vadas, Schwab Network contributor.